Hello? Hello? Okay. Hey everyone, good evening. Welcome back to the new month game plan. Press one if you're able to hear me. Let me know if you are here. Really excited to jump into what we can accomplish here in August with the new month game plan and wanting to get you guys prepared. What we're going to do here today, we're going to do a bit of a review of July. And we're also going to talk looking forward about what opportunities are going to show up within this upcoming month and what opportunities that we can show from us here at the teaching team of Teach.Trade. We look forward to being able to share some high quality setups that we've found, some opportunities that are, currently present, as well as going over the exact process that we use in any given session here. All right. So that's what we look forward to accomplishing and talking with here with you guys, and being able to demonstrate that. So just want to make sure we are present here. You guys can hear me. Alrighty. Just want to see if we have Jamal on here. Okay. Alrighty. All right. Thank you. Thank you. All right. So to begin today, uh, just want to go over here. We have Jamal on here. We also just want to kind of just, let you guys know as we're going to be what the agenda is going to be for today. Um, for the plan tonight, we want to finish the summer strong and give you guys a straightforward plan to be able to do that. One of the things that we're going to do first is review some of our performance in July, as well as some of the setups that we found from June going into July. Now, July really was a bit of a tricky month. Before we talk about any single ticker, we're going to talk about how we can reset after a choppy stretch and how to protect the money that you may have already made this year. All right. So we're giving still a couple moments for people to roll in, but let's jump into the actual session here. All right. So we're going to talk about the month ahead, key dates, setups, action items, and more. And so first, we have to grade essentially our homework. Well, what things that we prepared, how July closed, what we got right, what we learned. And so it's always important for this for just visibility and also to reflect. The only way to improve in trading is to reflect on the work that has been done, as well as the behaviors and more that you've undergone. That is the only pathway to consistency. So, first, we overall were a bit flat here in July. S&P basically closed flat on the month, down about a tenth of a percent. But the Nasdaq fell about 7%. This was probably his worst month in a while. We finally had a correction on semiconductors as well as memory stocks. And while that was happening, we had both ways movement at least four times in a row this month, in the way of splitting each week, having a different story to tell. Secondly, but one of the things about this is that we actually had a few July theses play out. We did have Tesla and HIMS. Those had those opportunities. They looked like setups, but they got both destroyed on a catalyst. But if you just waited for the trigger, Tesla's trigger, um, you are protected. If there's no trigger, there's no trade. All right. And that's working in real time. What we learned here is the bond market cracked. All right. So we had the Federal Reserve who just reported their interest rate numbers last week. They held their place on those federal those interest rates, and the 30-year yield spiked up, and this is the highest point since 2007. And essentially, what happened there was that investors started questioning whether this Fed is serious about inflation. All right. And so that's one of the biggest thing about the ball game right now is when we're thinking about these areas and how they can affect our overall progress. All right. So that's what happened and that's what occurred. All right. And so on this side, wasn't the greatest grading based on what our expectations were going into July. All right. And so there were a lot of red herrings that appeared. A big example here is a firm which had a large hammer on its 6-month chart because we entered the second half of the year. And while I was very bullish on that, what we had was a trigger of that hammer and a reversal all the way back down, essentially becoming an outside candle. All right. Some of these triggers, they lasted only for that first or second day of July, as we were identifying a lot of these areas on the 6-month. But either whether they stalled or that they had that initial correction, that's what we saw in store for a couple of these tickers here. So there's a lot of bullish opportunity that we were looking for while being very aware of the risk of correction. Midway through the month is when we definitely started to identify QQQ, NVIDIA, and other tickers as really strong contenders for at least a correction. But again, with so much choppiness and back and forth movement, we had narratives give grace to both sides. All right. So July was pretty tricky. Here on Jamal's side, Jamal had charted out Starbucks, and that did exactly as we planned. Pan W and fast, where we were breaking out towards all-time highs, as well as breakers to the upside for FAST. So Pan W and S-Bucks, those worked out pretty well. But again, anything related to a lot of these tickers in that healthcare, they definitely got hurt. And Intel was one of them, again, that whether it was sideways or whether we just had that major correction. All right. Take two as an example is the stock we're going to keep watch on as many people are familiar with the release of Grand Theft Auto. That's going to pare its way out in the coming months still. But again, choppiness is something that is the worst conditions that we look for, or the worst conditions that we can have in a given market if we are playing just to one side. July in retrospect could have been one of those opportunities where you definitely played spreads or played straddles where uh, price was just unlikely to hit two extremes. And so if something's trading sideways, there's a profit opportunity still there. And so what I want to talk about here is how to reset. Um, not sure. It seems like today, I don't know how large your chat setting is here for you guys to be able to chat, but I definitely want to know, just whoever feels as though that needs that. We may not have this chat setting completely visible, but if that is you, I want you guys to know you are seen, you are heard. All right. Um, because we were just aware as we've had conversations with a lot of our students, and even as we held our level up challenge, there was execution and confidence behind the trade was here and there. But overall, one of the things that was a benefit was that even in any space where market conditions were not certain, and they still aren't, as some of you may have read the news of how back and forth the conversations and things happening with Iran are still happening, especially as if you are looking in the current futures market right now, where S&P 500 is up, NASDAQ is up, simply because there was another canceled attack from the US on Iran. And so this back and forth movement is something that can mess with you mentally. Um, but as long as we have a system and a process to approaching that, that's something that we can actually get a handle on. And we've actually seen a lot of good efforts from our committed students when we did host our challenge, where making sure the risk was measured and profits and just overall capital was protected in a more proficient manner gave space to still survive and manage through any period where movement was not granted. And so, first with the mental reset, all right? If you had a red month in July, that doesn't mean you are broken as a trader. Now, I want you guys to hear me on that. All right. So, one of the first things I want you guys to hear is detach from your P&L. All right. A choppy month, it really can mess with your head way more than your account because it makes you second guess everything. And especially with your entries and whether you feel as though you're too late or too early. So, what we're doing here in August is starting flat emotionally because last month's result is not this month's edge. Okay. Number two, pausing on revenge trades. The most expensive habit in trading is trying to win it all back on day one. The market does not owe you July. Size down until you string wins together. All right. Especially tomorrow. Most of the time, first trading day of the month, personally, I risk down, meaning that I use less money on the very first trade of the month. All right. There are going to be opportunities that just run and go. We're going to cover a few that have a strong likelihood of just doing that first day. But there's still a lot of figuring out where if so many stocks had stayed inside such a large range last month, there's still a bit more movement they have to do to get out of said range. Okay. The third one, review. Don't ruminate. All right. Pull your July trades one time. Ask yourself two questions. Did I follow my plan? And did the plan have a strategy? Did I understand what entry and what is one sentence that commits to why I'm in that trade? If you don't know for sure why you're in that trade, or if you're so easy to forget why, then there has to be review. There has to be reflection and just a bit more work there. So you are going to be grading your process, not the outcome. All right. And then from there, we'll commit that to our routine. So reconnect with the framework. All right. Start each day with that same pre-market checklist, but start to experiment with different session times, unless you know the one that works for you, whether it's that first hour of the market or last hour of the market, right? That is how we climb back to confidence, one day at a time, one trade at a time, with a small risk until we develop that rhythm once again. And so after the mental reset, let's talk about the tactical reset. All right. So mark your levels, remark your levels. All right. Tomorrow, when the market opens, your first MO is to mark the price of which every stock opened. And we cover this every single new month charting. All right. Every single time we run one of these sessions, we say mark the opening price of the stocks on your watch list because that price is going to be so important for the next 30 days. If you marked some of your prices from our last session, keep those on the chart because the July openings are going to be significant for the rest of the year. Okay, whether we're above or below that. There's just a couple more to mark. Mark the highs of previous weeks and lows of previous weeks. Mark the highs of the previous month. All right. Next, if you are watching a lot of stocks, we need to cut it down. Let's cut it down to start this month just 10. But the lower the better so that we can actually refocus. Okay. Some homework for you guys is to determine in a dollar amount, what is your risk limit? Okay. For oftentimes, a lot of us think in our risk as percentages, like 20%, 30%, right? And it's useful to use that as because it can apply to different portfolio sizes. But an important way of actually knowing your risk and how much you are spending in each trade. That's not just about how much money you're putting into each trade, but what is at risk. Because sometimes we put $1,000 in the trade and say we're going to have a 30% stop loss. And then sometimes we put $100 and we have a 30% stop loss, right? And you might be trading good with having that 30% on the $100, but you have to remember how much are you risking if you have that same risk level at a higher amount. This is really important if you are somebody who puts different amounts of capital in different trades just based on how you're feeling. Because of that, you become surprised when the trade doesn't go your way and your portfolio drops a significant amount. So that is a tactical reset that we have to approach. All right. And then if you have a physical calendar or you have a Google Calendar, whatever it may be, plan ahead for the different catalysts and the important dates that we're going to cover here. All right. Very quickly, goes just off the heels of what we talked about with protection measures. All right. Determine your risk. I want you guys to do that in a dollar amount. What is the maximum that you allow on any given trade? It has to be a dollar amount based on what your portfolio size is. Determine that and set that and respect it. Okay. All right. And so defense wins in the market. Defense wins in the market, especially this market. All right. And so If you can, we recommend there are brokers like TradeStation and Webull and Charles Schwab. They enable you to place your risk limits or a stop loss as you're entering the trade. That way, you actually protect yourself the moment you're in. Okay? Consider that. Try that out. Spend 10, 20 minutes one day just before market or after hours setting that up. All right? Because when you know the dollar amount you're risking before you think about the target, that enables you to know exactly where you're wrong and to know, is this a quality trade if you can double what you are risking? If the trade shows you that you can double what you're risking based on the projected dollar amount move of the stock, you're in good hands and you're in a better position because it's all in front of you on how to perform and how to act. All right. And we're going to make some practice here into making sure that we uh, we're scaling at any given point where it is showing us to take profit. We have a lot of you guys utilizing our tools, our resources from the LVL to the SX indicators. And many of these, whether from the very basic to the more experienced, they all have target levels. You have to start to respect that. This is going to be the month of discipline. If July showed us anything, it showed us that we can get crushed very easily when things are just not perfect in our way or direction. But just with a slight tweaking in specific areas, we can be formidable and protected against the market. So the next section is just I want to tell you guys just about August in general. The structure of this month is a bit unusual. All right. There's actually no Federal Reserve meeting this month. All right. We basically have a Federal Reserve meeting every single month except for August. All right. So with this last event we did last week, we got to keep that until September. Generally, August is pretty low volume, honestly. It could also lead to a choppy month if we're not careful. All right. Because there's a lot of these hedge funds, they're going on some summer vacation. We still have more earnings to come of some of the bigger growth stocks, and especially Nvidia coming later this month. And then that's how we're going to be thinking about August, all right? So it's going to be a positioning and protection game. That's going to be one of the biggest themes here of August. Feel free to take a screenshot of this page, family. And again, make sure to stay to the end. We're going to give you guys a full-on game plan PDF covering everything that was mentioned in today's deck. All right. So, but we want to make sure you guys get the information on hand as soon as you see it. All right. So, take a screenshot here. These are some important dates you guys really want to pay attention to. You can look at that August 12th number there. That's going to be a really big week. Nvidia is going to come in the last week or so of the month. And then that Jackson Hole Symposium that says August 27th to 29th. All right. That's going to be something pretty wild, honestly. We've seen what happens, at least when former federal chair Jerome Powell spoke at Jackson Hole. Those were some of the biggest, craziest, wildest moves in the market. And now with this new guy, that's just something that we have to take into consideration because we don't really know him too much. All right. And all right, so now I'm going to pass this over to Jamal. Jamal, make sure to introduce yourself to the good people and feel free to take over the screen. Alrighty.
What's going on, folks? How's everybody doing? I'm Jamal, one of the lead teachers and instructors at Teach.Trade. If you were here last month, you saw, what I put out there. And I'm not really feeling too good about some of that stuff, but going forward, we're going to try to do better, but we can only take opportunities that the market gives us. Um, so yeah, did you want me to go through this, what's on the screen here? Oh, okay, here we go. All right, so let me see if I can actually pull this up on my side. Give me 1 second. Sorry about that. But as you can see there, I have about five, my starting five. And so this month I didn't want to get too bogged down. As you may have heard me always say that your focus is a superpower. And so it can only span as so much as your attention. So you don't want your attention on so many things. And so this month I try to just keep it basketball size. And so we have five players here on the screen, Oxy, Hood, Affirm, NVIDIA, and HPQ. And we're going to go through those to see what's happening with those.
Let me know when you start sharing.
Okay, 1 second. Okay.
Feel free to put in the Q&A any tickers you guys are looking at, guys, or any questions coming up.
Can you all see my chart?
Yep, I can see it.
Oh, okay. All right. So first and foremost, we had Oxy. So all of these moves that I saw kind of came on the monthly. And so I was also doing some analysis on the smaller time frames as well, like the 2 week, the weekly, just to see if anything was in correspondence. And so Oxy seemed like it had the strongest move, again with the war and whatnot. So this could definitely be a player whether it chooses to go up or down. But as you can see here on the monthly, we have a failed two down. This is basically broke the low of the previous candle, but it actually closed well back inside it and more towards the upper echelon of the range created for the month. So this is in a very nice position where even with the monthly ADR, if we look at the monthly ADR, this should be within reach to do it and still have a significant amount of ADR left to make a significant move after it breaks the high. So if we say the monthly ADR is around 8, um, and the move that it's needs to make is around $1, so it can still move, $7 in theory after the fact of breaking the high there and triggering. But saying that, this is a fail two down on the daily. I'm sorry, on the weekly. Also a fail two down on the week. Um, with that entry being above 57.10. And then on the monthly, the entry will be above basically 59. So you have, early aggressive entry above the 57.10, and then you have the 59 as the monthly entry. And then here we're looking at taking profits, as you can see on the screen, at 60.50, 61.24 to the upside, and potentially even 66 to the upside, depending on how Oxy does. Now, the line in the sand, if this does start to get bearish, I would just consider it as breaking below the 50% on the month. around 53.38, and then playing, wow, 47.77 as support or potentially a target point if we do break to the downside on Oxy. But like I said, this is relatively bullish, as you can kind of see, with all the time frame continuity as well as the trends on each one of these time frames is giving us a super bullish kind of average score on Oxy. So I'm definitely watching this one to the upside, and it's generally bullish on Oxy. Next up, we have Hood that they're just mopping the floor with for some strange reason. Hood here is the opposite. It's a failed to up on the monthly here, as you can see. It cleared the high of the previous month, but then closed all the way back here within the range of the previous month. So that's bearish for me. Again, Hood has definitely been getting clobbered. So this was a 2-1-2 down on the 2 week that's already triggered to the downside. We could take a look at that. So this is the 2-1-2 down from last week. I'm sorry, from the 2 week. So that's also a bearish sign. And then Hood also has the two down, 2 down on the week. So it's basically all of those time frames are kind of in confluence to the downside on Hood, with the monthly trigger being 83.68, targeting 78.93 as your first target there, and then potentially 73. And then again, line in the sand, if this does choose to get bullish, would be trying to get back above 101.85-ish, to potentially take out the previous month high. But as of right now, they're just not letting it up on Hood, not letting it catch its breath. I would definitely consider this to be bearish. So this is one of my bearish plays, but again, I do have that if this, then that mindset. So if above 101, then we could be bullish. If below 83.68, then we'll continue to be bearish on Hood. I feel so sorry for this stock. Next up was Affirm. So Affirm was something also that I was considering bearish. So this definitely also has the fail to up on the month with a similar theme. It broke the previous high, but then closed back within the range of the previous candle. Here again on Affirm, it also has lower time frame setup on that 2 week, which basically was a two up failed, two down reversal. So a 2-2 reversal that's playing out on Affirm, as well as the monthly failed to up. And so again, if we can cross under 69.62, then we can potentially take out 61.18, maybe even 59. If we hold above the line in the sand there, 78, then we could eventually maybe even see 86 again. But as you can see, stuff is pretty much red on Affirm, so I'm definitely more bullish than bearish. Or, I'm sorry, more bearish than bullish on Affirm. So this is another kind of bearish bias on Affirm here with a similar theme. They failed to up on the monthly on that as well. Next up, we have a neutral play. So this is NVIDIA. NVIDIA, yeah. So NVIDIA is actually neutral candle as well on the monthly you see there. It is a inside month. So it's basically a neutral bias as well. So the inside month, what we're looking for is this to either break up or break down. As you can see, there is a cluster of levels here that could potentially act as support on NVIDIA. So the real trigger would be a little bit underneath here. So this is basically like the 190 area here where you see this cluster of numbers where you can't, is muddled. And so the real entry will be breaking below that. So the trigger on this, I would say, would be 189.80. So under 189.80 will be your real trigger to potentially even take out 171.37 if NVIDIA wants to crumble. And then again, our first sign of bullish will be holding above that 202. And then actually the actual month trigger up from the inside candle will be above 214.40-ish. And once it does break those levels, it could potentially target either the 214 or the 232 um, on NVIDIA. So again, this is a neutral position. I'm just trying to see which way price action breaks from this inside candle on the month. So just to summarize everything so far, I'm the strongest on the first three, um, with NVIDIA being more of a neutral play. And then last but not least, HBQ also being kind of like a back burner play. This one has the strongest momentum, I would say, out of the bunch. But again, the problem with HPQ is that it does kind of have a ceiling around this 929.65 level where price action can't seem to, it's having a bit of resistance right there or a ceiling. But going further into this, HPQ has a fail to down on the month. It's a little bit harder to see if we can zoom in, but it did break the low of the previous month, but then actually closed back well above the inside of the range of the previous month there. And so we're looking for HPQ to continue to the upside. Again, just taking notice of this ceiling area here where price could act as a ceiling, aka resistance. So we want to definitely see it break through strongly that 29 level. The entry actually being 29, let's say 29.15. And then we want a clean confirmation above this 29.65 um, to see if that can actually get to 31, which would be a nice little bit of change there. Again, the line in the sand going back to the downside or getting bearish on this will be below 25.40, and under 25.40, we could potentially aim for 21.67 and potentially aim after that for 20.37. Again, this is I've tried to go in order of highest what is it? Highest confidence to lowest confidence on these. Again, just trying to keep it simple with the starting five. And again, have, some bearish moves as well as some bullish moves on those tickers there. So again, we just had Oxy, Hood, Affirm. So Oxy was bullish, Hood was bearish, Affirm bearish, NVIDIA neutral, and HPQ was also bullish. But again, it's a if this, then that type of situation. So I wanted to have lines in the sand for both bullish and bearish causalities or actionable signals on each case. Any questions on that?
You want to give your thoughts on Netflix real quick?
Netflix. I haven't looked at Netflix since I think it had a very wonderful day from off of one of the indicators. Let's see. Netflix long term on the monthly.
Abe,
So
yeah, whichever one. I think Abraham was looking at the weekly. But yeah, whatever thoughts you might have on Netflix.
okay. So Netflix on the monthly is a fail to down. Doesn't seem too bullish. But because what I'm looking at here on the month though is just basically this is in a downtrend. Um, I don't think Netflix has been solid since they were trying to buy Warner Brothers, and they just been on a tumble since then. So I'll really be looking for Netflix to get back above this purple line if we really want it to be bullish more long term. Looking at it on the week, it is a shooter, a bullish shooter. So that doesn't really give me too much confidence when we have a conflicting signal there where shooters should be bearish, but this is a two up shooter on Netflix. So in general, I would say that I'm kind of conflicted. So this will be more of a neutral play, going off what the day does, and what the day is also giving us is a neutral position there with that inside candle. So I would want to see what the day does, breaking which direction this inside candle breaks, and see if we can, liquidate one of these levels. So if we can liquidate 73 or we liquidate 70 based upon which way this inside candle breaks. So, I mean, that's kind of the perfect synopsis of what price action is currently doing. Um, right down to the daily. It's giving you that kind of indecision, but it's also giving you a, two levels that it could potentially break, either above 72.75 or below 71.11. If 72.75, then we could potentially take out that 73 and liquidate that. If below 71.11, we could potentially take out 70.50 and liquidate that level. But we will have to see, on the daily, which way this want to take steps towards. Whether does it want to take steps towards the upside, or does it want to take steps to continue in the downtrend that it's in? Um, let's see. So Microsoft on the month looks pretty strong. Basically, it looks like a failed two up, I would say. But this is my definition of the fail two up. So this is not necessarily the super Rob Smith Googleable definition. So what the fail two up would particularly want to see is it close below the opening of the previous candle. And this one didn't quite do it. I don't think it did. Oh, it did. Okay. So, but even still, this is a bullish candle on Microsoft, even though it didn't hold above the high of the previous month. This is still relatively two uppish and maybe even a bullish inside candle if you're just looking at the bodies um, on Microsoft. You can also see down here, you see a lot of green on Microsoft. Microsoft actually carried the market, I want to say maybe last week when it had earnings. As you can see, very, very bullish. So don't know if this is the start of a potential liquidation at these levels, climbing up almost $100, give or take, let's say like maybe $70 in a week there. We don't know if we're going to see people sell this off or if they want to continue to push it up higher. So we have to take it day by day. Um, Also have a gap down to the downside that it could potentially try to fill, but Microsoft does seem pretty strong. You just don't necessarily have an actionable signal on any of these time frames as far as the strat. You do have, levels where it has retraced from, for example, on this 4 hour where you could potentially take above 466.85-ish. But it's not necessarily a solid, like actionable signal as far as just a hammer up. Microsoft, I would say, be something to watch. I particularly like to play Microsoft, and the other, I specifically like to watch Microsoft as well as the other Mac 7s on those days where they have 0 days, Monday, Wednesday, Fridays, because at least one of them has a big move. It provides opportunity. Last week it was Microsoft, as well as Google on Friday. Uh, but yeah, I would definitely watch this on a day by day to see, what is going to domino effect to. So consistent performance on the daily is going to domino effect into the weekly, and consistent performance on the weekly is going to domino effect into the month. So starting off at the day, and maybe even the 4 hour, 6 hour, trying to find some sort of actionable signal. Even though we don't have it, we just have that hammer to see if it does break above 466.85 or if it wants to climb back below 460, 50 to potentially take out 460 on Microsoft. AMD has earnings, I believe this week. But for the month, I mean, it looks relatively strong. It's pretty much the one of the only chips that is performing very, very solid. Um, I guess I'll take that back. But this last month, it does seem like it lost a little bit of its steam. But AMD does have earnings, I believe, this week. I mean, this is a fail to down, but it's pretty bearish. Again, looking at the lower time frames coming down the 2 weeks, does look like we've consistently been having some top out selling. As you can see, AMD is basically near all-time highs, selling off buy low, sell high style. So back in March, AMD was $200. It's pretty much doubled and more since April, which is crazy. So like I said, this is the strongest performing, if not the strongest performing semiconductor of the year so far. And so a little bit of consolidation at the top of this big old mountain here is not too, I wouldn't be too judgmental about that. But we do have that mountaintop there that it is kind of consolidating, selling off at. So I would definitely again take this on a smaller time frame to see, what's happening. We do have consistent downtrend where we have lower highs, lower highs, lower highs, lower highs, lower lows, lower lows, lower lows. And so you want to keep that in mind. Um, fail to up on the daily is what's going to decide what's going to happen. Are we going to invalidate this fail to up, or are we going to validate it underneath 475.75 and potentially take out that liquidate that 457? Or are we going to hold above that 50% 495.70 and try to liquidate 55 555 and see what this daily continues to domino effect to the downside move, or if it wants to stop selling off and go back to the higher highs.
Okay. Did that answer Richard and Sal? All right, so I guess I'm go ahead share what I have on my radar here, and we'll keep it going. Thanks, Jamal. Everyone say thanks, Jamal, in chat.
No problem.
It's always big on the side of contributions for us to be able to do this, see this through and more. All right. So one of the major things here on my list is uh, mostly seeing a couple of the same areas, at least of the market, and a couple of tickers as well. As I'm also watching Robinhood for the similar area. I do see these requests to talk about banks, so don't worry. I definitely will cover banks as well if we haven't. So um, with so a lot of the tickers I'm charting, as you know, Jamal did as well. We're looking at these larger time frames as we're looking for particular triggers or finishes of stocks trading through a range. So quite simply with um, trading, oftentimes we're looking for a hammer or a shooter, right? And so we're looking for one of these a lot of the times. Either that or where we trade through one low of a range and then break to get to the other side. All right. So we're often starting from this point of view and looking for a stock to break beyond this pattern. All right. One of the first things that I see before I get to Robinhood is Google. All right. And so Google last week definitely was kind of wild to close the week out to the upside for the most part, right? Um, hold on, I want to make sure. And so what happened on Google last month is we definitely had some red for most of last month, but I believe they reported not the greatest earnings, but they beat earnings for sure and recovered quite a lot of that in the past couple of days. And so this time frame is the 2 month. And because we have 12 months in a year, you can imagine there are 6 candles in a year when we're looking at the 2 month time frame. So we split every pair, we split the year into pairs, right? And so when you start July, July's pair is July and August. All right. And then the next one starts with September, October. And then the last one of the year is November, December, right? So we're still active in this 2 month time frame all the way until August 30th. So Google hit the low of the previous month here. That was somewhere around 330 or so. And then we bounced and we're forming a essentially a hammer on the month, right? But not only that, this still has 30 days as an opportunity to get to all-time highs. And with its momentum, it does have that chance here. All right. So with Google, you know, if this does reflect this week that this continues on its pathway, I would be looking at 375 and basically around 375 as a call for any expiration in August. I probably wouldn't go much further out than that. But if this does have the ability to get all the way to the other side here to all-time highs, because again, what's happening is that we hit the low of a previous range and we're looking to get all the way to the previous high. And that's if this maintains that bullishness. If it does do that, September calls would be your best bet to make that happen. But again, that's highly dependent on what this week gives. To echo what Jamal said earlier with Robinhood, Robinhood is kind of it looks really great and then it doesn't, you know. We definitely recognize how much opportunity this stock in particular has. And I'm going to echo just a bit of like some of the financial sector here. They had a blowout earnings, fam. Um, both on their earnings and their revenue. But with the nature of the market and how they are trading back through their range, this has the space to still return back to the 70s area. When this was earlier this month of July, this was back above 100 in the 120 area, but wasn't able to hold above. A lot of us saw during those first 2 weeks of July that we could not get past 115. Let me know if you were there with me, fam. Uh anyone who was there trying to trade Robinhood. It was kind of crazy. So with Robinhood, to echo what Jamal said earlier, the larger time frame, they're also saying that this potentially still has space of a couple more dollars to drop. So I want to be watching for that. No matter how bullish on the technical, or excuse me, on the fundamentals of Robinhood we are, because there was a lot of catalysts for this to really go up and make its move. But the ranges that's trading in are only going to stay true as long as that's reflected. All right. Um, Here, Meta is a ticker I'm watching. Another stock that seems to have so many bullish catalysts, but it's just not happening. You know, they launched Instagram Plus, Meta Plus. They said that they launched their own AI model that was supposed to compete uh, cost-wise with ChatGPT and Claude. You know, regardless of those things, you know, they had their earnings and they got floored. All right. They really hit the floor because of their expenditures still. All right. In the past 2 days, this is making an attempt to fill that gap and bounce. And that's where you see this little wick at the bottom of this most recent candle here on the right. And so, but you know, Meta, I actually see this as a bearish stage at the moment, honestly. I have my trigger set for 524. I'd actually set an earlier trigger of 540 if we fall below 540. I would be seeing this for up to $100 drop. All right. So from this break, after we've created a range, made a higher high and a lower low. If we make another lower low, I believe this would really confirm a downtrend and look to get to these other targets down here. All right. But this does have to escape a lot of this range that they traded through for 4 months now. For 4 months now, it's been trading between like about 650 to 520. It's really been stuck there, you know. So if this were to break out of here, that would be a significant break finally. Uh, on the flip side, on bullish side, Chipotle is a bit of a random ticker that I'm emphasizing here. But it looks good. It had one of the strongest hammers after hitting a previous low. One of the first things I'm not sure if we d dove into enough today, but you guys hear me talk about it all the time, literally, right? When we talk about the swing highs and swing lows, we're always looking for when Jamal is saying a failed two down or failed two up, right? That's because we're hitting one side and then bouncing or simply reversing, right? Back through a range. So when we have like when price is clearly falling, right? It bounced, fell down. When we have the wick and we're hitting a previous low like this, and it forms that hammer, right? Now we see that clear hammer that looks just like this right here, right? A hammer after falling will translate into an opportunity to go long, to go the upside. So Chipotle has its space to keep it going all the way up to about 44, $45 areas. All right. So it had a decent July, actually, you know, different than many stocks, but this can continue up to this high back over here when you see my mouse. So something for you guys to look out for. So I'd look for calls up to 40, $45 there for Chipotle. And I think the last one here for my main watch list to cover is gold. And a runner-up is silver. So gold has an inside month. And it spent the last 2 weeks as inside ranges. So this has been consolidating because it's stuck inside a large range. All right. So when we have a lot of consolidation, this is actually, I said 2 weeks. This is 4 weeks. These are two candles of the 2 week time frame. That means this is 4 full weeks of consolidation. I'm expecting some big move eventually. Now, when you see double inside candles, I'm a bit biased. When I see double inside candles, when we're consolidating and we break one way, I do not think we're going to stay that way. We're going to stay in that direction. Typically, I see us breaking one side for a moment and then reversing all the way back to the other. All right, like with huge momentum. So whatever thing that gold attempts to get out of first, that's what I would expect is to be the fake out move, and then followed up by a way bigger move. All right. So gold is, as a commodity, this is actually really important to look at. It's lost a lot of value over the course of the past few months in this year. But it's just something there that you want to really highly consider. So now what I'm going to do here is I'm going to cover the sectors, and then I'm also going to cover that financial sector that, one of you guys had asked me to cover. Um, and so the sectors tape here, all right. One thing just to note about SPY. I'm going to start with SPY first, all right. With SPY, understand that we have been stuck inside of a range for 2 months, actually. But it was just way more apparent here in July. You see, we did not break the high of July, or excuse me, of June, excuse me. We did not break the high of June. We did not break the low of June. If you were ever curious, why is the market so choppy this month? And why do I keep getting faked out or the next day is up and down? This was a big signifier of what was to come, right? And in those early days of July, we actually started to see it coming, but as the humans we are, it is easy to get caught up, right? Just something to be mindful if you ever see that we don't have a clear pathway of breaking either side. But what this can set up for is a breakout, whichever direction it is. Right now, it looks like S&P futures are up here on this Sunday. They could fill back to the downside, but they are up because of news and the president. So we may have a chance to, maybe return to all-time highs. But it's going to be dependent on whether we're above 755 or below 730. All right. That's SPY for you. That's the whole story on SPY. I'm going to echo what Jamal said on Oxy, I believe. On the 2 month, again, we're combining two pairs of months, or excuse me, two months as a pair. Uh, XLE oil hit the low of its previous 2 month and is trading through this range with this green candle. So this has all the way until August 30th to get to this previous high at 62, 64. So this gives a bit more thesis to what Jamal mentioned as Oxy on his watch list. All right. With XLY, this one's pretty interesting. It's closing this again. It hasn't closed, excuse me, but it's currently in the 2 month as a hammer, trading back through this range. So XLY, which has Amazon and Tesla in it, that could be really interesting, honestly. I'd put more emphasis on Amazon than I would Tesla because Tesla's kind of in a little bit of a dump right now. We're going to cover one thing towards the end, family. Thank you guys for joining. And hopefully with the screenshots we've posted with our watch list in the chat, that's useful. We want to make sure that you save those. I can drop those one more time here in the chat for anyone who's just joining us. And then again, we're going to have a full-on PDF document to give you guys once we're done with today's session. ARKK, which also has Tesla. This is an outside month, and this looks like this is going to break down and collapse. Someone asked me about Coinbase. That's not in a good place right now, right? That Coinbase is having not the greatest optics currently, especially with missing earnings one more time, and with this news of Bitcoin hard copy, ledgers. It's not Ledger the company, but the hard drives where people hold their Bitcoin got hacked. One of the biggest hacks in Bitcoin history that was recent. And so Coinbase, Tesla, not in the greatest space. These can have further downside after this hit this previous high up here, rejected, and now is aiming for these previous lows. So I am highly bearish on ARKK at this current stage. So look out below if Tesla and Coinbase continue to fall. All right. Looks like I lost my space. I'm gonna come back to this. Don't worry. On some of the other sectors, okay, I think SPY, XLE. This one is an interesting one. So put IGV on your watch list. So IGV is the expanded tech sector. All right. So the stocks on IGV, this has Palo Alto, Microsoft, which we covered, Palantir, Crowd. Lots of cybersecurity has really been getting bought up here, especially Crowd over the past few months. All right. But one thing that's really important about this is that this is becoming highly bullish. If you see this chart, this is my daily chart, but I believe the weekly looks pretty compelling. It broke last week's high and it's currently up in the overnight market. The monthly on this one is a three and then a one, and it's a hammer. All right, so we have a hammer inside month that could break up and really fly up to the highs of even 108. All right, this looks like what pattern to you guys here on the daily chart? Let me know in chat. And so I don't trade this directly. I don't think you can much, but this is going to carry over to you guys to consider stocks like PANW, Oracle, um, CrowdStrike. Alrighty. So I want you guys to stay alert on that, especially Oracle. It's not on my main watch list, but I want you guys to not lose sight of Oracle, which is still an extremely important company, just like Nvidia is. All right, but people kind of let it drop recently. Um, so I'm going to cover now XLF from a suggestion here, and then I'm going to give you guys some goodies here at the end because we're nearing the end here. Thanks to you guys for joining up and always being a great part of the community at every stage. So XLF is really interesting for sure, given what's happened over the course of the previous days, especially with the Fed. On Friday, we did attempt to make a break of a hammer after filling a previous gap. So this is going to be highly dependent, right? Similar to a bit of what Jamal was sharing. I could see this either being a break over 57 back to what would be all-time highs. This is at all-time highs, family. A break over 57 back to all-time highs. But at the same time, we hit the high of this hammer and we filled this gap below. So if there's anything I know is that if this does make its way back to the downside, this falls not only to 56, which is the bottom of this hammer, but this falls all the way back under here from this low in July. All right. Because once we've touched and filled the hammer, or excuse me, gap, once we've touched and filled the gap, which you guys see as this blank area between the close of one day and the open of the next day, once we've touched and filled that once, when we come back down that range, that could be free falling. All right. Because we don't respect this anymore. We lost all respect. All right. But it definitely looks interesting, XLF, I can't lie. And on the the year chart is a giant hammer. So that could even set up into 2027, right? If it stays that way. The 6 month is very bullish. We have 5 months left. This 6 month chart, which is splitting the year in half, the more breaks we have in a certain direction, that's the stronger the momentum in that direction. And XLF has all of the direction to the upside. So that could be more, more, more. So I want to give that cosign to at least what you're saying and seeing. But I also just want to be cautious because we're trading back into the range between, I'd say, this high up here down to this low. So you just gotta be mindful of how we trade back into ranges because we could kind of hit the floor if we're not careful. And then just again, Coinbase that in a not the greatest spot at all. And Robinhood dropping as well is not really the greatest either. SoFi also gaps down recently. It's just all fintech has just not been in the best spot, right? SoFi looks interesting this week because it has this hammer on the day and it filled its gap, right? It has this hammer, reverse, filled this gap. So it could go back up. SoFi though is itself. It's just look how ridiculous this is, right? These price swings are just way too aggressive. And you're not trading anywhere outside of a range, this range that has been established since March. This has not escaped this range since March. And that makes for some good moves, but it has not been good at all recently. But just to come back to Coinbase real quick, we are in a bit of a downtrend now. And you just have to watch and be careful of Bitcoin and what's going on there because it's looking a little scary, just a bit, not entirely, right? Um, but it's holding on by a thread here for Coinbase. I don't really have too many more thoughts other than that. So hopefully that's oh, I haven't shared. I'm sorry, my fault. See Jamal over there is looking down. I didn't realize. It's all good, family. Um, so essentially what I was showing here was, yeah, for some reason it didn't just confirm what was happening there. Um, but here on Coinbase, what I was just showing was over here, this is this is hanging by a thread, and then we're talking about Bitcoin and more. I'll reshare as well here on what I was seeing on XLF. XLF is simply at all-time highs. All right. It's simply at all-time highs. It's breaking the 6-month high from the high of July. So this could bring it all the way to the sky. But what I was warning is that this is trading currently, if I go to the day chart, this is trading within this range from the this part of July and the low of July. All right. So it's like what we're saying is like anytime you have a break out of a range and then we kind of just hang by a thread, we can't break outside of this, the reversal back through can be really devastating. All right. Last thing I'll show is SoFi that this looks interesting, right? It has a hammer on the day here on SoFi. And again, when we compared hammers can get us up and we expect a breaker. This is been trading in this range since March. All right. Hopefully, the longer, let me know if you guys have been with Teach.Trade for however long, let me know how long it's been. If this is new, this is anything. But at any given point, a lot of our goals for you guys is to really learn and understand how ranges are extremely important. And it really gives a big credence to whether we act or not, whether we are taking action or not. The one thing going for SoFi is the fact that it just hit its low of 2026 and then started reversing back through immediately. That is something that definitely goes for it because before then, this has been trading inside of all of this. When we have something where it's a big high, big low, if you get trapped anywhere in between, you're screwed. That's bad trading conditions. And so when you have awareness of that, you know exactly what to avoid and how not to force trades. That's something that, in a way, we all should have had our best behavior when it came to July. But I definitely, at times, definitely got a bit too excited for what could have been in July. And those opportunities slip through the fingers. But I hope this is giving some space for your opportunity for you guys to be able to see uh, what is showing up and what is occurring, you know, throughout the market in these different sectors. Um, I know there's a lot we covered today, and as well, especially for anybody new to charting and more, we are, if you guys saw on the screen earlier when I mentioned the hammers and shooters and whatnot, though that is always to give you guys just a clear understanding that you kind of just look for these shapes. You get trading and planning your trades can be as simple as looking for these shapes. We just saw one on SoFi and XLF for a moment, right? Either looking for these shapes or just seeing price trade back through a box, right? Between some high and some low. That's most of the time what we're looking for, right? Just as simple as it gets. Of course, there's additional things we put on top there, but um, but so with everything there, I really hope that if for anyone who's been around, and we're going to give you the pathway, if you haven't been around the way, you want to learn more, we want to open up the space for you guys to move forward, and we're having a session in a couple of weeks. For anyone now, just for August, this is some of your homework. I'm going to just drop this into the chat. We talked about a lot of these, about marking your opening levels. That is extremely important. Trade smaller. The volume this month is lower. Honestly, there's going to be quite a few days I don't trade at all this month. And you guys are going to know. You might wonder why it's so quiet and not ridiculous. Than me saying, ridiculous things. But make sure you mark these dates like we mentioned. And what we also have here on the tape is making sure that we have a hand here for all of our folks here who are starting anew. All right. So in 2 weeks from now, we are having our new trader bootcamp, either for brand new traders or those coming back to trading after a while. We are having a 3-day boot camp where we go from zero to confident in just 3 days. And we cover every single sector of of those initial foundations of trading. All right. And so if any of this uh still needs a bit more refining and work to understand, we start from zero. Uh, so we have 3 days, and everything is recorded, but we highly recommend if you're able to make 3 days available, for just an hour or two per day. We have we're covering exactly what you're trading, the rules of the market explained in simple terms, how to read charts without any overwhelm. Just like I covered here, we start you from the most simplest standpoint and then work our way up. All right. And then from there, you also get a chance to see real trading before you risk any money, but that you gain the confidence to actually perform and take your own trades from developing a plan. All right. So we always want to make sure that this is as accessible as possible. So this is only $29. All right. You get us and have that chance to ask us as many questions just for 3 full days and more, and then getting live demonstrations of all the things that you need. All right. After that, we're going to have a full session just to be able to test exactly where you are, such that where you get your understanding. I dropped the link there in chat. If you are looking to get firmer understanding with any of this, or at least have a full reset, or if you know anyone in your family, your friends, your nephews, nieces, sons, daughters, it's available for anyone of all ages. And so the best part is if you've been avoiding trading or know someone who has been, or just you still feel that hesitation, We have 92% of the people who go through the program, they make their first winning trade within 1 week with a plan that they fully understood. So we just want to make sure, again, that within anything we do, there was a lot that we talked about at a high level. And this is to always make sure that we are giving you as much value as possible within just an hour. But we are always aware of you guys and how we should be dialing this back and taking into account how we make trading more accessible to the full audience, because that has always been the goal of Teach Trade, and training you guys to become teachers yourselves. Uh, Most of the people who've been with us have gone on to become really active members as well as mentors in our community. And they've also been able to share the information with people in their immediate life. And that's important to us because we also know that it's not always, you don't always have somebody to speak about this stuff in real life. And then sometimes the people in your life feel as though they can't participate because of the lack of knowledge that they may have. And we want to bridge some of those gaps as well, such that you are able to furnish your village and broaden those connections and more. So we invite you guys to be able to join us along the way. That offer is available to you guys whenever you do see fit. This is going to be August 16th to the 18th. That's what we're going to be having um, ready for you guys whenever it comes. All right. Some additional things to let you guys know. We will be at InvestFest Atlanta this weekend. All right. So we're actually traveling in the next few days. We're going to arrive there early. If you guys want to have a chance to meet any of us, the team, we're also going to be teaching there a bit and having real conversations with a lot of our audience. If I think I just had something here. Here, I'm gonna share this. Let me try to share this. It's gonna come from my WhatsApp. So this is us from last year, us and the Teach Trade community. You guys are able to see this. So it's a really, awesome community moment, to be able to meet you guys and really engage and share. Big shout outs to, let me see who I can name here. We have John, Jawan, oh man, Krishan, and now I'm blanking. I don't know what's wrong with me. My brain is just all over the place. Um, but I know everyone's name here, but I'm just like
I see
JD. Yep,
Missy's there, Yvonne,
yep.
um, is that
And this
Diana
wasn't
in the
even everyone.
background? Yeah.
And I put the link to sign up in the chat, every guys, if you wanted to do the new Trader Bootcamp. And we're also, again, we're gonna send you guys a PDF, everything via email right after we hop off here too. But yeah, we really appreciate the community. It's always, with so much extreme gratitude to even be able to host any of these events, engage with you guys in conversation. That wouldn't have been without the community and you guys' willingness to be better, to want to elevate yourself financially, and how we are sharing our goals and developing a culture of collaboration with our mantra of each one, teach one. All right. So excited to see you guys this weekend. Um, we're going to be seeing you guys even more in our next class that we will be hosting in 2 weeks. We're going to have a class and then we're going to have our boot camp. And then after that, we're going to have our next academy if you guys want to just know the timeline of things. So thanks, guys. We do really appreciate you for joining in, spending time with us, and getting the blueprint here for August. And so we're going to make sure you guys are prepared for this month. Don't do too much crazy here Follow these rules that are on the screen, and I promise you won't have a bad time. We can't guarantee you a great time, but we can say you won't have a bad time. Just follow this and just be very mindful overall, fam. I saw someone giving tickets in our Discord for InvestFest. There's still tickets available if you do want to show up. You can use the code SQUARE for 50% off. I think that's still working. And yeah, if you want to show up to Atlanta, we'll be there. Thanks, everyone. Thank you, Jamal. Thank you to the community. Uh, it's always a pleasure. Oh, yeah, we'll post in Discord if that link doesn't work. Yeah, the PDF is going to be emailed, Jessica, right as soon as we hop off here. Yo, what's up, Wayne? What's up, Michael? Thanks, Nico. Thank you, Kasana. Thank you, Potent. Hope to see you soon, Potent. Thanks, Lydia. Thanks, Troy. Simon. Nice to see you again, Simon. Carla, good night. Sean T. Later, Mike. I saw your message, Mike. We're still trying to fix that for you. Quentin and Marie, thank you. How many hours per day? It's really just about 1 or 2 hours. Yes, 2 hours each day. Typically each one is at 8 p.m. And then we have a live trading one on the third day, and then closing class. But we make sure to, if there's any session you can't make, it's recorded and whatnot. But we emphasize that people can show up to get at least answer questions. Nicholas, you've been moving. I know moving can be a lot. So I hope that's going okay, Nick. Yeah, a year went by so fast. Nice to hear, Sabrine. All right, guys. Thank you all. There was an anonymous attendee. I wish I knew who you were, but maybe I'll see afterwards when you ask the question. We'll see afterwards. All right. Thanks, guys. Peace, family.